Okay, in this video, I'm going to work out question 12 from your homework. It's slightly confusing when they return the games, but initially what happens is you have to identify yourself as the company Handheld Game Devices. So when you first sell your product, you're going to sell it for more than what you paid for it. There's going to be 2 journal entries every time you make a sale. So the first journal entry is a sale on account. When we sell on account, we are recording revenue that we have sold the product. So revenue would be the credit, and accounts receivable is the debit here because we sold it on account. I'm going to need to look at how much I sold each item for and multiply it by the number of devices they sold to come up with the total revenue. So I sold 58 devices for $140 each. Right there is your 58. Mine said $8,120 is what I would record as the revenue in the accounts receivable. That is the initial sale of my product. I'm going to need to record the cost of that product that got sold. So again, I'll have to refer to the number of games I sold, but I want to multiply it by what it cost for me to purchase that product. In this chapter, we are a middleman, so we are going to take the number of units that we sold and multiply it by our cost. It should be a smaller value. You want to sell it for more than what you paid for it. So this 6,960 that you see on the screen is what I paid to purchase those 58 units. So it was $6,960 as a debit to my cost of goods sold and a credit to my inventory. Now the next journal entry will reflect that the customer, we are the company called Handheld Game Devices. Your customer is DS Unlimited. Your customer returned a number of units in your problem. Mine says 3 game devices. So those were defective. That journal entry is going to have to reflect. That should reflect the number of games returned and that the customer no longer owes us for that product. So it doesn't have anything to do with our inventory on this journal entry. In real life, that would be an issue, but these are defective. So we're not placing them back on our shelf. So we have to use the concept from chapter 5 where we said if somebody returns a product to us, we would debit the sales return, or we would debit the sales return on this journal entry number 3 and credit accounts receivable to reflect that they no longer owe us for that product. It's going to be 3 on mine, 3 game devices multiplied by the price I was paying, I was charging each customer for those. So that first value in the problem multiplied by the number of devices that were returned minus $420 is a debit to sales return because they're bringing the product back to you, and you're going to credit the accounts receivable to reflect that you're not going to receive payment for those products, the ones that were defective. The customer no longer owes you for that part. Entry 4 is going to reflect that they do pay you, but you need to analyze the amount they owed you in the first transaction minus the amount they took off of your, minus the amount they returned that you took off of what they owed you, and consider if there was a discount. So initially, I'm going to show you this in the calculator. You sold 58 units, but 3 of them were returned. So really, it's 55 units that the customer owes you for, and you were charging them $140 per unit. And it said August 6th, there was a 10% discount eligible to the customer if they, or 2% discount, excuse me, if they paid within 10 days. They're paying on the 14th, so that is within the 10-day time frame. 16th would be the last day to pay and take advantage of that discount. So what they're going to pay me is going to be 2% less than this $7,700 that they owe me right now. So when I go to do my journal entry, scroll on down here, it should reflect that I do receive cash. And I receive cash from the accounts receivables that are owed to me. But I am not going to receive full payment on that because there is a discount. So what I'm going to have here is that I need to clear off the accounts receivable. It needs to zero out. So if you look at the first transaction and how much you debited accounts receivable for, which mine was $8,120, and then the third transaction I credited for $420, so 8,120 minus 420 is the 7,700 that is owed to me, but I'm not going to receive all of that. There will be a discount on my problem, it said, of 2%. So the sales discount is $154 on mine. The rest of it I should receive in cash. You could analyze it by saying 7,700 multiplied by 98%, $757,546. And I will record that and check my work. Here's a reflection of all of the journal entries. Please contact me if you have any questions.